Well, it looks like the problem, always good to have you, is the margin story. That's what investors are focusing on. You blamed on the conference call supply chain issues and shrink. Can you just expand on that? Explain why margins came in light.
Yeah, if you look at gross margin, about half of the decline in gross margin was driven by the pressure on the supply chain costs, and that's pretty common across all companies. And if you look at shrink, organized crime is certainly more prevalent today than it was a year or two ago, and those two things were about half. Now, on the flip side, we were incredibly proud of the cost controls and the OG&A reductions. So when you look at the two together, we actually had a very good balance between gross and operating OG&A and operating margins as well.
So where does that go? Especially this issue about organized crime, which has impacted a number of successful retailers lately.
Yeah, we're actually working with other retailers and working with industry groups as well. I know the government is starting to focus more energy on it as well. We have a great partnership with the FBI and then local crime units. But it's one of those things where we're going to do changes to help try to minimize it. But we're also engaging with others as well. And hopefully collectively we're able to address it. And an awful lot of that product is easily sold on the market. And in the past, it would have been more flea markets and much harder to sell. If you look in the current market, it's much easier to sell in the market.
One initial thought when looking at a margin miss was that you might be having trouble passing on higher prices from the raw materials inflation, the commodities inflation that we've seen across the board to consumers. What's happening there with the prices consumers are paying? How much are they going up and how much will that continue?
Yeah, if you look at within your question, obviously about 2/3 of our customers are concerned about increases in cost. For the most part, we're able to pass those costs through. And the places where we're not really is part of our strategy where we continually offer a customer a better and better deal as we get process changes to be able to afford it. So overall, we're able to pass it through. We are starting to see a little bit higher inflation as we predicted and thought we would.
But is it only a little bit higher, Rodney? Are you fearful more so, say, this month than a couple of months ago, that it could be more pronounced and prolonged?
Yeah, I love the question. Right now, we would estimate 2 to 3% inflation in the last half of the year for us. That's about 1% higher than where we thought it would be when we started the year out. So it's slightly higher, but not a huge amount. So we certainly think it's something that's not out of control, and it's something very manageable.
I don't know where that fits into the transitory discussion, but we'll leave that to the Fed. Rodney, the sales were strong. They were stronger than expected, and you did have the confidence to raise guidance. So what does that tell us? Is it because of the COVID Delta wave and people staying at home more, or is it something more sustainable?
Yeah, it's something more sustainable. One of the things that our customers are telling us in our research is they enjoy cooking. They enjoy cooking at home. They enjoy the time with their families. They like showing off some of their new skills. So what we're finding is the customer enjoys it. They feel like eating at home is more affordable and healthier as well. So all of those things are things that everything we can see is more permanent in nature. If you look at the COVID, the Delta strain, it was fascinating. Early in the month, our digital business had slowed down, but almost all those customers moved to physical stores. As you get later in the month, a lot of those customers move back to the digital experience. So what we've found is our overall ecosystem, we call it seamless, worked exactly the way we would hope, and we're there for the customer how they want to engage with us.